Let's take a look at some information and charts on Synthetix for Brave New Coin. Synthetix is a derivatives liquidity protocol, as they put it. It's essentially a lending and borrowing protocol, slightly different in that you need the token to mint the Synthetix. And therein lies the immediate issue. All synths are backed by SNX tokens. Synths are minted when you stake your SNX with a collateralization ratio of blah, 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 and that changes based on voting governance. So immediately you realize that this is a single collateral loan, essentially. And should the value of SNX change dramatically, mainly to the downside, you're going to have some issues with collateralization. And then there's this forever long squeeze effect where unless you add collateralization to your loan in the form of SNX, price will continually liquidate people in a waterfall type fashion. They say here that they're trialing Ether as an alternative form of collateral. And the interesting part about that is the synths will be better off with more forms of collateral, but the use case for SNX, the token, will fall off dramatically if you don't need it to actually mint the synths. So the protocol would benefit from multi-collateral. The token would take a hit, but it's going to take a hit in every single bear market or every single downturn because it's just going to squeeze everybody every time it drops. And we saw that on May 18th. We saw that from May through June into early July. And then as soon as this market flips or sentiment changes, like it did a few days ago, SNX skyrockets because you need it to mint these synths. So a bunch of people likely are minting when prices are low, because then when price rises, your collateralization is less at risk. Hopefully that makes sense. Another part about some of this stuff is the yields on, I noticed for SNX specifically, was incredibly high, even during the downturn, even throughout this upturn over the past couple days. On Yearn, on Aave, ideally that would buffer some of this downside as people see this high APY and think, okay, there's risks here obviously, but it's at some point it's worth it, right? It hits a tipping scale for somebody that says at 30% APY, there's clearly something going on here that's risky, but eventually people step in, right? The flip side of that is when you see high APYs, there's usually a reason for it. It's not always a good reason. In SNX's case, it was because there was a ton of on-chain liquidations because of single collateral issues. So here's their platform staking component. Pretty self-explanatory, easy to use. I don't have any issues with it from a UI design perspective, but I think they are going through a redesign. They have layer 2 stuff as well through Optimism. Not going to talk about that too much, but just know that it is earning a crazy amount of APY on layer 2. So even with the token itself in a rapid decline over the past few weeks, these high APYs help eat some of that downturn. And here are the list of the synths. Now originally they had inverse synths as well. They froze those or paused them over the past few months, and I don't really know why. Originally I was going to use these for basically shorts on Enzyme for BTC and ETH, but it looks like you can't really do that, even though they're listed here under their stats page. I should know more about what's going on here, but I feel like it changes very frequently. I don't know why there's so many shorts, collateral, blah, blah, blah here listed when you can't actually open inverse ETH. Nevertheless, it's mostly ETH currently. As far as synth dominance, it's ETH, USD, Euro. So a lot of fiat synths, and then a little bit of BTC, Link, and Aave. And we can look at the trading volume, always important for any DEX type activity or lending and borrowing. What's the volume? What's the borrowing? What are the liquidations? So volumes did pick up beginning of the year and picked up big time in end of April, early May. And looks like the all-time high was shortly after that May 18th liquidation spike across the board. And you can see where the volume has happened. I'm not familiar with Quinta. I don't know anybody who's necessarily familiar with it. Obviously Curve you've heard of. D-Hedge, 1inch, Enzyme. That's me. That's not all me, but some of it's me. Yearn, SNX. Number of trades also important. Those have fallen off since January. it just, to me, the sentiment is that a lot of people got sour on getting liquidated, and or there just aren't a lot of people using this thing on a daily basis. It's like sub 150 trades per day. Why use a single collateral loan when you could go to Aave, Compound Maker, get multi-collateral stuff that you don't have to necessarily worry about the volatility risk? So I think for them, multi-collateral is definitely going to be the way to go in the future. Here's a governance piece as well, where you can use your SNX, I believe, to vote for these proposals. Most of this is collateralization related, or fees, or listing certain synths, that sort of thing. Now we can look at the TVL over time. Increased rapidly throughout January and February, and then ever since then it's kind of been on the decline, and obviously May 18th was a big drop in TVL. That's on DeBank. I always like to look at a few websites for TVL. DeFi Llama also reporting similar type of number declines since January, February on TVL here. So because TVL for SNX is mostly SNX, or if not all of SNX, this is going to be basically glued to whatever the SNX price is. If we look at transaction counts for SNX, unlike a lot of the other stuff that's pure governance token, this is more relevant to me because you actually need it to mint your Synthetix. And again, you can see these spikes in January, February, fallen off since then, but overall since 2020, there's still a lot more activity on chain now relative to then. And average transaction values hit all-time highs in mid-May, along with those liquidation spikes, which is kind of to be expected, because if people need to add collateralization, or if things are getting liquidated, you're going to see a lot of on-chain activity there. And we saw that in the days leading and following May 18th. So with transactions still falling, it's hard to be super bullish, but overall, the token transactions are still extremely high relative to where they were in 2020. NVT, which for everything kind of looks bullish right now, which is a measure of on-chain activity relative to market cap, still in a range. It isn't massively printing a buy, but it is at range lows, I guess you could say, and falling, which should be read as bullish for the metric. Active addresses, though, this kind of tells me all I need to know. Active addresses have fallen off considerably since February, but again, up since 2020, sure, but you don't want to be part of this downtrend in active addresses for anything. It just says there's very little interest in activity relative to where it was in January, February, so where the price is now makes sense based on what you're seeing here. Interesting thing though is Synthetix Google Trends, which isn't necessarily purely synth or SNX, because Synthetix, I guess, is a word that people search for outside of crypto. You can see some activity here prior to 2019, or prior to December 2019. But anyway, this is rising here recently. So this could be a leading indicator of a turnaround in active addresses, a turnaround in transactions, which have already started to perk up a little bit. And it's likely rising because price rubber banded in a big time fashion over the past couple days. So if we flip to technicals, this is the 1 year MA in the green. This is 5 times the 1 year MA in the red. And maybe the simplest buy zone, sell zone picture you're going to get on anything, green being buy, red being sell. It taps that sell zone 3 times on the way up. Basically tapped the buy zone 3 times on the way down, currently still in that buy zone. So if we survive this low, it's saying basically 6x is going to be the ceiling, and that'll rise with price as price rises. Now, KuCoin is the exchange where I'm getting this data from. Binance and everybody else haven't traded SNX for this duration, so you have to use KuCoin for that specific indicator. Here's the 5200 yearly pivot and RSI. So you can see we had the death cross mid-May. Price continued to decline rapidly. Briefly hit oversold on RSI, just barely, and then bounced big time. And it has a history of this, likely because of that single collateral component, where if prices are falling and people do not buy SNX to shore that collateral up, they get liquidated. The price goes down because of those on-chain liquidations. Or they're adding collateral and they still get liquidated, right? Then you get a bigger liquidation and you get more margin cascade waterfall situations. So after all of that occurred and was sort of done, people finally stepped in, potentially due to APYs, potentially due to things just retracing harder than everything else, almost back to its yearly open, back to the yearly pivot, and then it bounced over 2x, kind of back to that 200-day moving average. Trend-wise overall, it's still bearish, but it's one of the stronger coins over the past couple days. And on the cloud, you can see this mean reversion potential with the TKC clamp, which is essentially on every single chart right now. This is on Binance, where I can trust the volumes a little bit more than KuCoin. KuCoin's volumes are not legit at all, so keep that in mind. But we did basically retrace to the previous consolidation zone, this inverted head and shoulders, Kumo breakout. So even if you've got problems with the way the platform runs, you could say, all right, it was a decent buy opportunity here based on just technicals. And even I was a little behind the curve on that because I was just so sour on what was going on the platform side of things. So this still has potential to run to 16 based on complete mean reversion to the Kijun there. And you can see how this looks on the 12-hour. It got inside the cloud. Now it's retracing back to the Kijun. So it's telling you buy at 10 and hold until 16 with a stop loss somewhere below 7 and 8. We'll say below 8, whatever the cloud is here. If this continues to act as an edge-to-edge mean reversion play to 16. So I still think based on that, it has a decent upside. ETH-BTC just been in a range. Trend metrics are neutral to bearish. Certainly not going to outperform BTC in the long term based on that. And then ETH as well, just in a range. Does not look like it's going to outperform ETH. Even though it does have a bit of a bull div here on these lows. Bounced some mean reversion attempts here. Collectively though, it doesn't, in a high time frame scale, it doesn't look like it's ever going to outperform BTC or ETH in a big way. So if I was trading this, I would just trade the ranges, buy the low, sell the high, and be done with it. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance non-custodial portfolio management tool, where you can see AUM performance allocation, all the trades I make on DEXs, Paraswap, Compound, Lending, Aave, Lending, Yearn Lending. You can see the deposits and withdrawals people make. You can send USDC or ETH into the smart contract, or you can just watch what I'm doing. And sometimes the site is slightly delayed or the oracles aren't exactly correct. And if you're ever confused as to what things should look like, you can always check somewhere else, just like I checked the bank and DeFi Llama for TVL. You can check Zerion for the oracle stuff. Usually the numbers are slightly more correct at times, but some of this is an oracle issue. Some of this is just Subgraph, I think, is the name of the site that they use, or the name of the web host or whatever that Enzyme uses. So anyway, that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.